G'day, folks. I want to explain to you why we're seriously considering leaving the hellscape that is the Toronto real estate market. I was recently exploring the mountains, the Great Rockies that Canada has to offer in Alberta, and on top of this mountain, I ran into a young couple that mentioned that they actually just moved from Ontario to Alberta because they had remote jobs. They packed up their 2 vehicles and drove out and did the great drive to Alberta, which I found very intriguing because I was recently seeing an onslaught of articles saying that Alberta sees its biggest population boom in years, mostly from Ontario. Statistics Canada's numbers show that 37,122 interprovincial migrants came to Alberta, while 27,265 people left the province. The net gain was composed primarily of Ontarians, which I found very intriguing, and I want to give you some insight into the Ontario real estate market. We have some recent updates coming into September. We're going to take a look at everything from condos to residential, but a lot of people misunderstand why the Ontario market, specifically Toronto and the surrounding Greater Toronto area, have seen such a boom in real estate prices. Though correcting, I still think once this kind of market balances out that the growth will continue into the future, primarily because of the Greenbelt. This is limiting land that is protected by government rules that prevent basically construction and commercial building, meaning when you can no longer build residential, industrial units out of the city, you can only build up. And these rules were fought against like 5 years ago, but because so many land people wanted to protect the nature and everything surrounding Toronto, obviously every time they've tried to expand the Greenbelt and where they can build, it has always been shut down. And this has been one of the greatest factors, in my opinion, that most people really misunderstand when it comes to exactly what's going on in the Toronto real estate market, because you can see this Greenbelt area is where you cannot construct. My parents own a 65 or about a 62, 63 acre farm somewhere up toward Lake Simcoe area here, where their limit to sever is only at, I think if you have 65 acres, you are allowed to sever 1 acre for new residential building, which within permitting and all the red tape, it's not even worth building new properties unless it's at an industrial scale. So it's very limited to what you can do, because if they started cutting down the Greenbelt limits, all the surrounding property value would jump dramatically. But then again, as we continue to build and meet market demand, that would obviously start cushioning the value of homes, because you can just obviously start building out. But that's stuff that takes years and decades to come into fruition. And for the time being, this is what we're dealing with, right? So taking a look at where the current statistics sit coming into September, beginning of October here, guys, we can see total residential transactions are down 44.1%. Seasonally adjusted, we're only looking at a month-over-month drop of about 10.8%, which is still absolutely insane. And again, we're not talking about prices specifically, but let's talk about those prices, because we've seen home prices over last year basically go from 1.35 million to about 1.086 million. This comes back to that constant debate that to be a millionaire in Ontario today is the equivalent of being middle class, which is just absolutely bonkers when you step back into the real estate market here, even 5 or 6 years ago, when I imagine the average selling price was sitting somewhere closer around the 5s to 600 range. Like, we've seen a doubling in this market because of the population boom, and because globally we're recognized as one of the fastest growing real estate markets, which leads to a lot of foreign demand, which the government has been fighting pretty drastically against. Seasonally adjusted, however, we're still seeing a month-over-month drop of about 2.7%. The total new listings year over year, guys, have decreased 16.7%, as most buyers do not want to list their home in a depreciating market, when most of the buyers have moved into the rental market, driving rental prices up year over year 20%. And inevitably, all those people that are renting will eventually come back when the prices seem more feasible to them. And obviously, interest rates start cooling off, inflation starts cooling off, and we start seeing a balance back into the buying of real estate in Ontario. So this is something for the short term I think is going to likely continue until we see a cushioning in the interest rate environment. But taking a look at the property days on the market, guys, and the listing days on the market, these have both increased dramatically, because we were in a market where people were sight unseen shoveling for sold signs into the ground, and now all of a sudden people are barely making bids on homes, and now they can actually look at homes and negotiate prices, which is probably making a lot of people that were doing fix and flips, all those people are stressing out right now, because every month those properties sit on the market, they're going to be willing to negotiate just to prevent the loss. So that's something good for somebody that's in the market to be buying right now, is you could probably find some good wedge deals and really kind of work on actually getting a good price in this current suppressed market. Now, commercial stats are very intriguing intriguing to me because all leasing activity for commercial, this would be like your industrial warehousing, shipping units, Amazon-based stuff. I mean, we're seeing a drop in about 12.7% for the leasing activity, and all the sales activity is now down 42.3%. So this is very intriguing. I know most people probably don't care about these stats, but if you're into the industrial REITs, for example, this is really good insight into the growth that they're probably going to lose out on to the potential, because I mean, logistics were exploding with Amazon factories and everything in that nature, just kind of slowing down here. But what's really intriguing is the average industrial lease, the rate has actually gone up per square footage by 20.3%. So even though there's a slowing in the leasing rate, so the demand for those properties has slowed down, but the actual industrial lease rate itself for the people that are currently leasing has gone up in value, which is pretty good overall, which is really intriguing. But what's most intriguing is the condominium sales stats here, guys, because I think most people are terrified to overpay for the devaluation of homes and stuff like that, and they may not want to pay the higher rents. They're moving to where the most affordability is, and that is in condos. Now, the Toronto condo apartment sales have dropped pretty dramatically, actually probably the most at 35.2%. However, the average selling price now for condos is starting to increase quite a little bit healthier. They have slowed down when you look on a month over month basis, but on year over year, they're seeing the best gain still at 12.2%, giving the average sales price of about $769,000 over the $686,000 we saw last year. Total new listings obviously is pretty much nominal at this point, and sales to new listing ratios down 21% year over year, guys. Days on the market, it's up about 15.4%. Now the condominium rental stats also get very intriguing here, because the total apartment rentals, guys, is down 11.4%. The average one bedroom apartment has actually increased 20.2%. And again, this comes from the value of everyone moving into the rental market. And the total new listings year over year is down 29.8%, also really pressuring the value of what it costs to rent, because if there's not enough new listings coming online and everyone's moving into the rental market. So obviously owning a condo and renting it out right now, guys, if you're new to it, has been fairly fruitful all in all. Now, this is just the Toronto surrounding GTA real estate kind of market, a little bit of in-depth knowledge there. But now let's talk about the Edmonton area, guys. Close to Calgary, really close to the mountains where we were hanging out. And after exploring these areas, we found it as an extremely intriguing place to move to. A lot of people, they have their ups and downs of Edmonton with the winter, some of the weather stuff, but from our personal perspective, how diverse Edmonton's become, it is exploding dramatically. It isn't restrained nearly as much by the Greenbelt rules, meaning that it's not going to see the same explosion in real estate prices, but things are nominal. The prices are more feasible. The cap rates, if you are buying duplexes, triplexes, or buildings for rental units, they actually positively cash flow much better than they do here. And again, guys, you have to imagine that if you're buying a median house for around $363K is a lot different than buying a median house in Ontario with the price being around $1 million. It really changes your perspective and outlook on life. And in fact, one of the most ridiculous things to me is you could get a 2-bed, 2-bath condo, probably 800 to 1,000 square feet for a cost of anywhere from $1,200 to $1,500 a month on a rental price. Whereas in Ontario, you're looking at about $2,800 to $3,000 a month. I mean, you could afford to rent a beautiful apartment in Edmonton and fly out to Ontario every single month and have tons of money left over. It really changes your perspective on travel as well. Now, what also makes Edmonton an intriguing place to buy is, again, the negotiation that is very similar to Ontario, because they're seeing an explosion, a little bit different to Ontario, because month over month, they're seeing a 1.7% in current new listings, and year to date up 4%, yet the current month over month sales are down 10.3%, and year to date is down 14.9%. So it's, again, we're in this market now where it's very negotiable to actually be looking to buy. Now, if I was going to move to Edmonton, and again, this isn't something concrete, it's something we're going to consider over the next 6 months while we deal with some of the real estate problems I'm currently dealing with and just helping my parents out here in Ontario as they move into their retirement phase. Now, I don't know if you guys have been to Edmonton, but after recently exploring it, I find it to be a very intriguing prospect for somebody that is new to the market, that has really good savings, because in my current position with my current girlfriend, fiance, we're looking at a bunch of different opportunities, and we feel like this could be a potential just from the raw fact that we have family there. It's a beautiful place. It would make it easier for us to travel, and with remote work becoming a very prominent things in our lives, I don't know why we would want to sit in a market where we would have to use every dime possible to basically get at parity for what it would be to rent to own, and bringing the cost of that property down to those exact rental prices, you'd have to come up with a $400,000 down payment on an $800,000 property, which would be at par with comfortable living if we didn't want to just rent a basement apartment and try and only pay $2,000 a month for rent. Now, again, just take a look at some of the population growth metrics, because I still believe that Canada is one of the most prospectus places for people looking to buy real estate, because of our population growth will always leave demand, right? And just taking a look from 2010 in Edmonton, guys, their population went from roughly about 1.1 million to where it sits today. Let me move my head out of the way a little bit here for you guys. We can see today it sits at about 1.5 million, seeing an increase of by almost 50%, 40 to 50%. And Toronto is still a booming market, right? They're sitting at a population in 2010 of about 5.5 million, where it sits today at about 6.3 million, an increase of about 800,000. But on a percentage basis, even though that's a bit more in population, Edmonton on a percentage basis is growing much faster, but again, not constricted by obviously greenbelt limitations. They do see more, development going on. But if you find the right area within some of the cities in the more, attractive areas, I still think you can buy great properties that will see still some really nominal or reasonable growth from an equity value perspective. And again, you're able to negotiate in the current market environment. And these are just some of my thinkings. Again, I'm not looking to move out of Ontario tomorrow, but as we save money and as we look at using some of our cash, where would it be most optimal for our living and giving us the best opportunity to have a comfortable life, and again, giving you the opportunity to travel, looking at building families and just things like that. In Ontario, I just do not feel like is the place to do that unless you have an extremely high income that is very reliable. As currently the statistics sitting, if you want to live in Toronto and own real estate there, the average income that you would have to sustain would be roughly $200,000 to $230,000. Things to just take into perspective, but I'll pass that question off to you. I'd love to know what you guys think about all this in that comment section below, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.